Hello traders, it's Ombututu FX. So today I'll be talking about Fibonacci retracement. So what is a Fibonacci retracement? That will be our first question. Our second question will be, what are the golden zones of Fibonacci? Then our third question will be, which time frame will be the best one to use in Fibonacci retracement? Our fourth question will be, how to use Fibonacci retracement? And our last question will be, why should we use Fibonacci retracement? Let's start. So, Fibonacci retracement. What is Fibonacci retracement? This is the definition of Fibonacci retracement. Nimewaandikia hapa. I've written here the definition of Fibonacci retracement. So for those who don't understand, let me translate the Fibonacci retracement. So, a Fibonacci retracement is a tool. It's a technical tool analysis, It's a technical tool analysis method that identifies potential support and resistance levels using ratios derived from the Fibonacci sequence. So Fibonacci retracement helps us to identify support and resistance zone. Like you see, this is an uptrend. This is an uptrend. So the market is making higher lows and higher highs, higher lows and higher highs, higher lows and higher highs. So this zone is our support. You understand? This zone is our support. This zone is our resistance. You understand, guys? This zone is our support. This zone is our resistance. So Fibonacci retracement helps us to understand and to know which zones are best in support and resistance. So number 2, I'll be talking about golden zones of Fibonacci. So golden zones of Fibonacci include 0%, 50%, 60%, and 100%. So our main golden zones for reversals are 50 and 60%. So let me show you. You see at this zone, this tool, this is our Fibonacci tool. So you just drag your mouse there and click once. Just click once. After you click, then you come and drag here. Drag on your chart. Let me drag on our chart. So when I drag on our chart, you can see this is the 0% zone. This is the 50 and 60% zone where most of the reversals happen when the market is on a trend. So 50 and 60% is where the market most of the times makes reversals. And then we have the 100%. So from 50% to 100%, that's our premium zone. Then from 60% to 0%, this is our discount area. So most people will tell you that buy at a discount zone and sell at the premium zone. If I translate that, mainly they're saying you should buy at a cheaper price and you should sell at an expensive price. So number 3, best time frame to use Fibonacci retracement. So guys, Fibonacci retracement does not need any time frame. You can use it on a 1 minute time frame, you can use it on a 5 minutes time frame, you can use it on a 4 hours time frame, you can use it on a weekly time frame. It doesn't matter. You can use it on any time frame regardless the trend of the market. So I'll be talking about how to use Fibonacci retracement. Now we are here. How to use Fibonacci retracement. So guys, let me first delete this Fibonacci tool. Let me delete and we start again. So let's go and pick our Fibonacci tool here. This one, Fib retracement. Just click it once. Then on a bullish trend, you see this is a bullish uptrend. So you'll drag from the lowest zone, from the lowest zone to the highest zone. You understand? So you'll come and draw Fibonacci there and drag it to the highest zone, like that one. You got me, guys? So you see, from the lowest to the highest point, this is why you want for trades. You want to take your trades. You want to take your trades on the 50% and 60%, guys. So you see the market made the higher low and then made the higher high. So it is reversing. So what you need to do is just draw your Fibonacci tool from the lowest point to the highest point then wait for the market to reach your 50 and 60% zone. The moment the market reaches the 50 to 60% zone, that's where you look for confirmations like bullish engulfing candle, change of characters, yeah, something like that. This is on an uptrend. Then the same thing on a downtrend. On a downtrend, you'll draw from the highest point to the lowest point. You got me, guys? Just take a Fibonacci retracement tool, then drag it to the from the highest to the lowest point, like that one. Yeah. So on a downtrend, you'll wait the market to come to your 50 and 60% zone to take your trades. You understand? So I'll be talking about why we use Fibonacci retracement. So guys, as I said earlier, we use Fibonacci retracement as a what? As a potential support and resistance zone. That's number one. And number two, we use Fibonacci retracement for what? For reversals. Yeah, if you want to trade a reversal, you can use a Fibonacci retracement. Yeah. So when the market is on an uptrend and you want to continue, you want to join the big banks. Yeah. When the market is on an uptrend and you want to join the big banks, kindly use the Fibonacci retracement. Wait for the market to reach your 50 and 60% zone and enter your trade there. So let me go on a live chart, Yeah. So this is USDCHF, guys. This is USDCHF. You can see. This is USDCHF. You can see. So the market made these. This is what? These are let's call it a potential support areas. After market made this support area, then the market made an uptrend. So what you'll do, you will the market to start reversing, and you'll draw your Fibonacci from the lowest point to the highest point. You see, guys. So the market started to make a retracement here. You see. So I told you earlier, on a 50 and 60% zone, that's our golden zone where we will take our trades. So what did the market do the moment it reached our 50 and 60% zone? It reversed aggressively. Yeah. Another thing, if you miss that trade, you can enter using an order block. An order block I'll talk it about later on our next video. You see, guys. The moment the market made this, the moment the market reached our 50 to 60% area, it reversed aggressively. Yeah, you can see. Let's look for another one. Leave this one alone. This one is a continuation. This one I was using on a 1 minute time frame. That's why you can see the reversal very well. I'm looking for another one. Just a minute, guys. Oh, Sisi Sude. Just a minute. I'm looking for another entry, guys. Actually, that was our example.